Welcome to the Capital Spreads Weekly Update. Today is Wednesday, the 12th of October 2011, and the markets have remained relatively buoyant. The FTSE is at the moment testing the resistance that it has failed at on several occasions over the last couple of months. So it's around 42.25, and that's a key level. Can it push higher than there? We're yet to see that. Several failed attempts at getting beyond this level, so a crucial time for the FTSE. Dow's at 11,500. On currencies, the euro's had a good little run higher. Some people saying it's bears being squeezed out of short positions, others a lot of optimism ahead of a key speech this afternoon. But Eurodollar's at 137.80. Some good strength for cable as well. General dollar weakness. Cable's at 157.65, and that dollar weakness has translated into a bit of strength for gold, which is at 16.85, and also Brent is stronger too. These markets have had a very good run of recent during the strength in equity markets. Brent's at 111.70. So the key themes of this week really have been the vote yesterday by Slovakian government to say that they do not wish to expand the EFSF fund, the bailout fund in Europe. That's hasn't really taken, investors have taken that news very much in its stride. It's not expected to cause too much of a problem because the general consensus is that the Slovakians will vote through the measures by the end of this week. But of course it just delays matters. The highlight certainly of today is a record unemployment, or at least a 17-year high for unemployment in the UK. Really not great figures for the government, of course, who are trying to bolster growth through and employment through the private sector when they're cutting jobs in the public sector. So this news not welcome at all, and it just goes to show that things going forward are going to be very, very difficult to find jobs when the economy overall is flatlining. So as mentioned, the euro is seeing a bit of strength, equities are seeing a bit of strength, but can the FTSE head beyond that resistance level? So how are clients trading it? Well, very much short the FTSE. That doesn't come as much of a surprise because often clients do oppose the FTSE at its highs, and that's where we are at the moment. So they're quite heavily short the FTSE. They're also very heavily short US indices, in particular the S&P. So clients expecting a bit of a correction to the downside after the strength we've seen over the last few days. On the currencies, they're long the dollar, so they're opposing the weakness in the dollar at the moment, and relatively short, a little bit short the euro. So again, the currency market's just going against clients a bit at the moment. They're quite heavily short Brent, which is interesting, so they feel that maybe the strength in Brent too has gone too far, and as ever long gold, so hoping for a return to the dizzy heights for the precious metal. The rest of the week, key economic data really comes in the form of China inflation on Friday, which will be important to watch from a sort of global growth perspective. We also have retail sales from the US and University of Michigan confidence from the US, both expected to slightly rise. And of course, today the US earnings season gets underway. Well, it did yesterday with Alcoa, who disappointed, but we get a raft of US earnings which gets underway today and started yesterday. The theme of this week, well, it has to be the Slovakian vote. What does that mean for the Eurozone? As mentioned, it is expected still to go through this week, but what this means is a further delay to crucial decisions. Now, this afternoon we've got a key speech from the European President, the European Union President, about how plans are what the proposals are for recapitalising Europe's banks. So this afternoon might see quite a bit of volatility, but very much what does the Slovakian vote mean for the Eurozone? Well, what it means is that when new plans are announced, which we're expecting this afternoon, it's going to have to go through another ratification by all EU member states. So that's going to mean another 17 votes, and that could cause further delays to the whole crisis, which is, we've seen recently meetings being pushed back. And of course, next month, at the beginning of November, we've got that crucial G20 meeting. And all these delays is really making things a little bit more difficult. You wouldn't have thought, say, by the strength, judging by the strength of equity markets, but is the urgency there for European politicians to actually solve the debt crisis? That's it for this week. As ever, do give us feedback, media@capitalspreads.com.